Hello and welcome to This Week in Review with Nigel Farage. Nigel, the first big piece of news I noticed this week was that mortgage rates in the US have hit 8%, which is a high going back not to 2007, but to 2000, so much earlier, given what happened last time round with US mortgages causing a bit of problem in the world. Are you worried about this round?
Well, I mean, US national debt's about to hit 34 trillion. Debt through every other level, be it corporate or personal, is higher than it was back in 2008 when we had the credit crunch. And so what interest rates ultimately do is reflect risk in a marketplace. It's quite simple. And that's why the number's gone up. People saying, crikey, where are we going with all of this? So I mean, whether it stays as high as that, I don't know. But I think one thing is for absolute certain, we are not going back down to interest rates hovering just above zero. That is not going to happen. It may happen again in the future, but it ain't going to happen at any point over the next decade or more. So we are stuck with 5% plus interest rates, I suspect, on both sides of the pond for a long time. But clearly, there are people beginning to express some nervousness about the levels of debt in the USA, which I have to say, I think is realistic.
It's the amount of borrowing as well, isn't it, that's actively occurring with that deficit. But the part of this that I don't understand, right, is if you told me a year ago the interest rates were going to spike, I would have said to you, they can't really go far beyond 6% because something will blow up. Something will go wrong somewhere. Someone borrowed too much money and can't afford that. And we sort of saw that with some of the banks going bust in the US. We sort of saw that with the UK gilt market causing a bit of trouble for Liz Truss. But since then, nothing's really blown up in the same way, despite the fact that interest rates have continued to spike. Are you expecting something else to go wrong?
The fact they haven't doesn't mean they won't. I mean, they're two very different things. And often when it comes to companies, big companies getting into real trouble, there's often a very big lag time between the moment when, the accountants think, this doesn't look too good, and before it becomes something big and public. So it would be surprising, given the way interest rates have been in America, and if they stay at this number, it would be surprising, very surprising, not to have more and perhaps quite significant corporate failures.
Yeah, and the jump in interest rates in the bond market seems to be getting a bit disorderly often, every now and then. So they might have the same sort of issues that we had in the UK.
Yeah.
But let's move on to the next from one debtors to the next. We've got, over the next 4 weeks, the debt ratings agencies, the ones that caused a bit of trouble in 2008, they are going to update their debt rating on Italy. Now, none of them are expected to downgrade Italy's debt rating officially. They are expected to worsen the outlook that they expect for Italy. And there's a big difference there because a lot of the funds that invest our money can only do so based on certain debt ratings. So if they do downgrade Italy, it really could cause quite a big problem for Italy's borrowing capacity and interest rates that it would have to pay. Are you expecting any sort of trouble? And do you think debt ratings agencies still matter as much as they did in, say, 2008?
Whether debt ratings agencies matter as much as they did, having got things so badly wrong back at that moment in time, I don't know, or care particularly. But what the market's telling you, with bond spreads starting to widen again, with Italy against the rest of the Eurozone, particularly Germany, it is another warning sign. Now, we've seen cycles of this several times in the last, slightly more than a decade. But something different is happening this time round, and it's the rise of the AfD. The AfD, the last polling I saw, put the AfD on 23% in Germany, much higher in the old Eastern Germany. They're now clearly in second position in German politics, and for the minute, nothing seems to stop them. And certainly with what's happening with global events isn't going to stop them. And of course, remember, that party was founded by economists. Economists founded that party, saying it's okay, fine. We might have done well out of the euro so far with a depreciated currency helping our exports, military equipment to Greece. I mean, you couldn't even make some of this stuff up. And they recognized that. But they said at some point in time, there could be one hell of a price to pay for all of this. And without getting into the complexities of Target 2, at some point in time, Italy will need more bailouts. And if you start to have a German political class that start to get reluctant on this, then of course those bond spreads would go a lot wider. Now, look, I'm not suggesting this is going to happen in the next month, but I am suggesting it'll happen sometime in the next year.
It becomes interesting because so far the crises we've had in the European sovereign debt mess have come from places like Greece and Italy, where governments have been elected to pick a bit of a fight. We haven't had the same situation occur in the heart of the Eurozone from Germany. So there's a couple of new dynamics there that could make things interesting. Are they still sort of a Eurosceptic party these days?
Well, I mean, Meloni has been far more emollient in government than anybody thought. Which is why you don't see the front pages plastered with Italian outrage, because she's kind of done what the other EU leaders want. But there's no doubt that it's actually the migrant crisis, I think, more than the Eurozone directly, where Italy is being driven apart from many of its other so-called partners within the European Union. I mean, it's why she made common cause with Rishi Sunak the last time all of the EU leaders met. So is Italy still at loggerheads with the EU? Yes, but it's much more over Lampedusa and the huge numbers that are now crossing the Mediterranean than it is directly to do with economics. Look,
I meant the AFD more so, but I think the answer is the same. The AFD is focused on immigration more so than...
Well, they are, but I mean, as I say, yes, they are, but you know, they are a party with deep skepticism about the euro as a financial project. And I think that's a very important thing.
And that pressure is rising again given what's happening online.
Sorry to interrupt, but if you're enjoying this content, you can get it every single day. Just click the link in the description or go to fortuneandfreedom.com. Get a daily email from our team of experts. Thank you.
Next piece of news I want to ask about is the Binance story, because this is quite close to your heart. We've got the biggest cryptocurrency exchange in the world. They've stopped taking new UK customers after the FCA, which, by the way, Nigel, regulates us, of course. So keep that in mind. They had some issues with Binance's advertising, and so Binance sort of given up on new customers in the UK. What does this mean to you? Do you think this is going to hit the crypto price? Is it just one exchange and we shouldn't worry about it, or is there more to the story?
Well, it's a very important exchange, and there's no question about that. I think what we're seeing, and I began to feel this through the banking round that I was having in the course of the summer, which, by the way, isn't over. Another instalment coming next week, you wait. But I think what you're seeing with the attitude of the FCA, and in particular with the attitude of the banks, is it's becoming harder and harder for British investors legally to invest in cryptocurrencies. The screws are really being put on all levels, and I think Binance are looking at that and thinking, you know what? There are so many other markets around the world. Why do we need the aggro, the compliance cost of doing things in the United Kingdom with the banking sector and an FCA that appear to be quite hostile towards us? And what a change that is. From Rishi Sunak 2 years ago saying London could be the centre, of crypto trading, and we've gone completely the other way. That's why I think Binance have done what they've done. And remember that with all forms of financial markets and financial products, compliance cost is now, in many ways, the single biggest issue. I mean, astonishing to think that our own money laundering regs, Forbes say, for every £1 of laundered money found in the UK banking system, the compliance cost is 100 quid. So, when you understand that, you can perhaps see why Binance are doing what they're doing. It's mind-blowing, isn't it? I mean, it is mind-blowing, but that's where we are. It's what I call the sledgehammer to miss the nut. And it's why, if what the bank computer deems to be an exceptional payment goes into your account, and especially if you put some cash into the bank, they sort of alarm bells go off that you could be a front. The fact you're living in Surrey is irrelevant. You could be the front for a Colombian drug gang, and your account gets closed.
It makes me feel a bit less alone in the banking quagmire of my day life, though. The news story that I sort of copy and pasted to chat about this said that the standards are among the toughest in the world. I think the way
well, you can raise your standards so high that you crush all business. And a little bit of that's happening now in the crypto world. Well, thank you for watching, and I hope you agree it's never been more important to take control of your own money, your own financial situation. We do a daily free email, a Fortune and Freedom daily email with lots of knowledge, lots of insight. It's a very useful way of protecting yourself for the future. So please click the link in the description or go to fortuneandfreedom.com and get my daily email.